Gold prices are having one of their worst days in years right now, down 5% at the time of recording this video. And just look at silver, down 7.5% in a single trading day. At least, like I said, at the time of recording, this stuff is really volatile. By the time you see this video, prices could be back up or they could be much lower than where they currently are. But precious metals are taking a big hit today, and in this video, I'm going to talk about why and whether or not this is a dip buying opportunity or if you should steer clear. Let's talk about it in today's video. As we get started, make sure to hit the thumbs up button, subscribe. Let's go. So we're seeing the dollar remain firm, which is maybe a part of the reason why the gold market is rolling over. But I actually think a large component of it is both geopolitical uncertainties being put to rest potentially, and some stability in the realm when it comes to stock markets back to all-time highs. So let's break down the geopolitical headlines that might be moving gold prices. So first, we expect Trump to actually meet with President Xi, the Chinese president, and expect to talk about Taiwan and a trade deal, which he has predicted will take place. So that's coming up, and if that takes place, of course, that takes a huge uncertainty out of the market. Actually, two big uncertainties. Taiwan is a major uncertainty for the market, and of course, the trade dynamics are too. And another one is that Trump says he will meet Putin in Hungary for a Ukraine talk after a very productive phone call. Now, this was a couple days ago, but the theme here seems to be there's deals that are taking place, and deals taking place are usually not a positive thing for gold. Remember, gold loves chaos. Now, is there certainty that President Xi and President Putin will just kind of agree to terms with Trump? There's no certainties there. Things could get ugly or things could get great. We don't know exactly how those things will play out. But gold is not taking its chance or waiting to see what happens. It's selling off now because there are planned meetings that are going to take place in the eyes of the market. And so if the market says, hey, they're going to meet, that's probably going to end well. I mean, if they're meeting in the first place, that is perceived as a positive thing in the markets, because for a while they've been wishy-washy about even meeting with the US president. And so this geopolitically settles things down a little bit. And what that means for gold prices is that it could be pulling back. But maybe even more simpler than that is just the idea that gold has had such a massive rally, and despite having a 5+% pullback on the day, at one point hitting 6.5% down from peak to trough, I mean, that's a huge sell-off for one single day. But I think it's important that we look at the context. We are still in a dominant, really impressive upward trend for gold, but this is the first candle, I would say, where we have had just decisive selling at least starting to take place in the gold market. However, is this a dip that you should be selling into, meaning you think it's going to keep going lower, or is this a dip to be bought? Well, to answer this first from a technical perspective, I do think gold has more room to pull back. I don't necessarily think that this is the end of the pullback, and that I've been saying on my channel, I think we're due for a pullback. I have not in any way tried to time it, and I'm definitely not short gold, and I wouldn't even make a bet that it's going to continue to pull back. So let me get that out of the way. I'm not shorting or bearish on gold. However, we are seeing a really strong bear candle here, which in my opinion could actually be the start to a consolidation or pullback phase that is much needed for gold bulls out there. Now, again, if you chased gold prices up here, if you were, buying with leverage, if you're chasing the momentum, that worked for a while here, but maybe this is the first sign that, true selling is taking place, and some of the loose hands, if you will, the paper hands, are going to get washed out of the situation. We see this time and time again in financial markets. When something gets too hot, one big sell-off kind of causes the people who bought in late to panic sell, causing further downside. So could we see a bigger pullback in gold? I would think so, and I would actually hope so. I think that if you're looking at the Fibonacci retracement from this rally that we've had since mid-August till now, a 38.2% retracement looks really attractive, and that's just below $4,000 an ounce. That also coincides with the 20-period moving average, and I think we very much could use a healthy pullback to that level, or even a further pullback to the 50 or even the 618% retracement. All of these areas would be constructively bullish zones of support. In my personal opinion, if you are bullish on gold, we should be hoping for healthy pullbacks to wash out some of the leverage and bubbly nature that can take place when you get one directional moves for too long. Again, if you are a true gold bull, you should welcome pullbacks in any bull market that you really like. pullbacks are good. They reset the thing and they allow it to keep going at a healthy trajectory rather than melt-ups, which can lead to complete meltdowns. Are we in the phase of a meltdown? That's the question for the day. And in my opinion, probably not. I think gold prices can continue to rise in the next several months, but we may be due for a consolidation phase or even a pullback into some areas where fresh buyers can step back into this market. For the time being, my system is getting a neutral reading when it comes to gold. I'm looking at the EdgeFinder's AI scanner, which looks at technicals, institutional activity, sentiment, inflation data, jobs market data, and economic growth metrics. And we're getting some mixed signals here. So am I going to be buying the dip right away on gold? No, I think we actually have room to continue to pull back, but I remain neutral. So I won't short it and I won't go long. But I think from a healthy pullback perspective, a pullback to this 61.8% retracement, I'd start rubbing my hands together from a longer term bullish perspective. I'd love to see that, and I think that would be very healthy. Today's video is sponsored by a brokerage that I have personally used for the last 5.5 years and absolutely love. The sponsor of today's video is Webull. With Webull, traders can trade US listed stocks, international ADRs, OTC securities, and fractional shares. You can also trade ETFs with access to over 3,300 ETFs. They also offer an advanced screener tool and research platform. And if you're an options trader like myself, you can check out their options platform, which I find personally to be super advanced, but also really easy to use. With their options, you can execute commission-free trades with support for multi-leg strategies, real-time Greeks, implied volatility data, and both equity and index options. And somewhat more recently, they launched futures as well for those interested in trading all sorts of different futures contracts. You can also buy and sell over 30 different cryptocurrencies within the app. And here's a couple reasons why I personally love Webull. Check this out. First and foremost, when it comes to trading costs, they offer 0 commissions. And that's specifically commission-free trading on stocks, ETFs, and options. However, index options may have low contract fees, regulatory and exchange fees still apply. And one thing that sets Webull apart from the rest is their incredible charting software that they offer. It's super clean, easy to use, and pretty advanced. Their platform includes over 50 customizable indicators, 60 technical signals, for example, candlestick patterns and trend lines, Fibonacci retracements, multiple line styles like Heikin-Ashi, and so much more. And if you want to harness your skills before going live, you can also use their paper trading platform. This allows you to trade with real-time data with a risk-free environment. And just as cool as the desktop app is actually the mobile app, which I use all the time because it is super clean and easy to use. With Webull, you can have a cash account, a margin account, an individual or a joint brokerage account. You can also do traditional or Roth IRAs and rollover IRAs. And while there are so many other reasons that Webull is such a standout brokerage to me and why I've used them personally for the last 5.5 years, maybe the easiest reason as to why I like them so much is their super clean interface and some of the statistics that they actually show you when you are placing trades, etc. For example, the P&L calendar is like a super popular feature, and it's one that I've really loved having over the years. So if you're interested in exploring Webull yourself, check out the link in the description down below, or you can download the app on the App Store and explore it to see if it's a good fit for you. So sign up with my link below and take advantage of all the great offerings Webull has waiting for you. Now back to the video. Just a reminder, even after the sharp sell-off, we are still 20% away from the 200-day moving average, which is sort of your stronghold for bulls over a longer term upward trend. The 200-day moving average can still get retested in a bullish trend, but I have a thought process for you for those who are really watching the metals market close. We could also see something that I don't see a lot of people talking about, which is a correction in time. And what I mean by that is there is a possibility that instead of a full-on crash back down in order to reset, that we instead go sideways on gold for a while. Maybe we head down to this area and consolidate for a few weeks, allowing the moving averages to actually catch up, in which we call this a correction in time, allowing our indicators, allowing our tools, allowing price action to normalize a little bit after having just a one-directional melt up. So what I'm saying is that you could still be bullish and acknowledge that maybe we consolidate for a few weeks before we continue the run higher. There are many reasons, in my opinion, big picture, why gold can continue to rally and continue to be strong, but we've needed this, and this is actually a welcome thing to true bulls in the precious metal space. Overbought readings, staying overbought for too long, can lead to melt ups, which can lead to complete price crashes. So in my opinion, this is good news as a bull. A similar story can be told for silver. You can see we are absolutely selling off here today, over 7% at one point. I think we even hit 8%. Yeah, I mean, look at this, 9% in a day. That is a violent sell-off for the precious metal. And the question is that all we're going to get in terms of a pullback? Are we just going to hit this 20-day moving average and bounce? Well, in such a strong bull market, I wouldn't be surprised if you do get a bounce. Though, like I said, same thing for gold. I would love to see a healthy corrective pullback. And if we get our Fibonacci retracements out from these lows in late July, we can actually see we're getting close to a 38.2% retracement, but the 61.8% retracement is in the low 40s. Maybe we see price double back, retest this area, and find fresh, strong buyers to continue the rally. I would actually love to see that. And like gold, the EdgeFinder's AI scanner is also getting a +4 or a neutral reading. And part of the reason I think we're getting some sharp pullbacks in metals is because we're getting some sharp rallies in stocks. Now, these things are not perfectly inversely correlated, but we are seeing a lot of optimism around the stock market. Company earnings, financial earnings seem to be promising so far, and we also have an economy that seems to be growing above trend. And what you're looking at here is the Atlanta Fed GDP Now, which is an estimate for future GDP readings. And you can actually see the Atlanta Fed, which is where I'm from, and they do one of the better jobs I've seen out there for predicting GDP, still is projecting for near 4% GDP growth. I mean, guys, that is strong economic growth. And I say this every time I mention this. I know that that can feel like gaslighting if you're someone who's not doing great in this current economy, especially in the US. I mean, things are expensive, and it's what I keep referring to as a K-shaped, not my phrase, but I keep referring to this concept of a K-shaped economy, meaning people who have assets and existing wealth, real estate, stocks, etc., are doing quite well, whereas people who do not are really hurting in a higher and higher price and type of environment. Anyways, the GDP is the output of the overall economy, which accounts for, the wealthy sort of consumer, which seems to be carrying the whole thing on its back. Right now, Atlanta GDP growth is still projected to be very strong. I do think stock earnings will be really strong as well, in line with this. And in my opinion, this strong return back to the all-time highs from the S&P 500 after such a quick sell-off and quick recapture of those lows, I think that actually bodes really well for stocks, obviously, but it also doesn't bode well for gold and silver. Remember, these things are what are classified as alternatives. People rush to gold and silver when they're worried about, the economy, the Fed, the stock market, etc. Whereas there actually seems to be some pretty strong moves happening in the stock market. So perhaps investors are still, for now, feeling solid in their stock purchases. I also think seasonality plays a big role here. I've been talking about this a lot, but we know in the end of the year, the S&P 500 tends to rally alongside the NASDAQ and the Dow Jones. And during that same period, perhaps we're going to see gold follow its historical tendency of pulling back or consolidating slightly into the end of the year. So on a technical basis, from seasonality's perspective, I think gold can consolidate and stocks can continue to push higher. And part of the reason I think stocks, not just in the US, but internationally can continue to push higher is that most of our major central banks are still projected to cut interest rates. Let's not miss the forest from the trees here. When it comes to the overall environment, we're talking about interest rates being cut, economic growth that is still there and showing strength despite the lower end consumer not doing as well as the upper end consumer. We still have growth in the economy, and we can kind of take away from that again, the economy still seems to be holding up, interest rates are being cut, corporate earnings are still very strong, and I think that supports stronger stock prices. And I thought this comment was worth bringing up. Brett Maloney says, at some point, it won't be a buy the dip moment, in reference to this video where I talked about the NASDAQ buy that I'm currently still in. Then everyone will be trying to get out at the same time. This is especially the case now we're exposed to such systematic trading, and risk rises the higher it goes. Good luck with that. For now, Ponzi-nomics still rules. Again, this was in reference to my conversation about buying the NASDAQ and looking to run to new highs with it. And I responded, again, there are reasons to worry about stock prices eventually cratering, but it's impossible to know when that is going to take place. And even if he's right, if he wants to call it a whole big Ponzi, for now, Ponzi-nomics still rules. He answered his own question here, as his own frustration with the situation. Until that changes, until dips no longer get bought, the trend is your friend, both in price and in macro data, and it's best not to fight it. So in my personal opinion, when it comes to risk assets, it can feel frustrating sometimes when you look at the stock market and you're like, this thing just never takes a break. It just goes up and up and up. Eventually that will change. It doesn't happen forever where the stock market just every little dip gets bought. But as a trader, we have to trade the environment we're in, not the one that we think is coming or the thing we think should be in. We have to trade what we're in. And right now, when it comes to things like the NASDAQ, right, I'm still bullish and think that we can push to fresh all-time highs because we're in a bull market, because we're in a bull trend. Will that end eventually? Sure. Our job here as traders is to look for that end and signs that is ending. But again, ultimately, we're going to look for price to solidly define that with the help of macro fundamentals and sentiment analysis as well. So for now, the bull market rages on until proven otherwise. For those of you guys who are interested in the EdgeFinder and want to try it out for free, check this out. Starting very soon, we'll be posting some updates on how you can try out the EdgeFinder completely free in our free to join Telegram channel. Again, we will be making some posts about how you can access the EdgeFinder completely for free starting in the next day or so. If you are not in the Telegram channel, this is where we will announce it first. So first come, first serve on this, because I'm telling you this because the last time we did a free week, our system blew up. There were so many requests to get access to the EdgeFinder at once that our email system kind of broke down. So if you want first dibs, first access, the best way to get your free week of the EdgeFinder during the free week event that we're doing is to join our Telegram channel using the link in the description down below or the pinned comment of this video. Alternatively, simply scan the QR code that's on your screen right now if that's easier for you, and it will redirect you to the Telegram channel where you can look out for updates on the EdgeFinder free week event starting in the next day. As always, if my videos are helpful to you, consider hitting the thumbs up button and subscribing, and we'll see you back tomorrow.
Hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.